What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for January 31st, 2023. So that sounds like something you're interested in. Consider subscribing, as we do provide weekly updates as well to get you prepared for the day and the week ahead in this glorious market indeed. Now, today we got some selling, but it was pretty ratty to say the least. We did have quite a big candle come back down. Technical wise, that 4100 wasn't going to break. Something we talked about last week, coming into this week, that it needed a break, and it did not do that. Something we've also talked about is that coming into any monetary policy, the market is a little cautious just in case. We've gone on a huge run up to this point, and this essentially could be considered our earnings rally, on top of a little bit of hopium mixed in there for a 25-point basis move. Now we are predicting to get a 25-point basis move alongside the ECB that have bumped their rates up to a 50-point basis move, followed with potentially another 50-point basis move. So it is very interesting to see what happens here. I think coming into Wednesday, not just Wednesday, but Wednesday is going to be extremely pivotal. We do have a lot of earnings this week as well. So that is something you do have to keep in mind. We do have Snap and a couple other earnings coming into tomorrow night. So that is important. More so, what I'm really, really watching is obviously what's going on with Powell, because whatever he says is going to dictate which way the market's going to swing. You will also have big earnings on Thursday. We do have a lot of big earnings this week, but Thursday is keen because we have Apple, Google, and Amazon. So we have a very big week, and this week is essentially the pivotal week that's going to essentially dictate what we do. Now, if we do have some upside, just be forewarned that I think we can run a little bit more. I know we have, like I've talked about, 4,200, 4,300 are possibilities if the ducks align. Aside from that, it really depends on the tone in which Powell speaks on Wednesday. That's going to be extremely important, what he says, particularly moving forward, not so much the point basis. I can see a 25-point basis move. Again, if he says 50, they're going to obliterate the market if they say 50. But we have to also understand that we haven't had another core in a while. But this is something that has come up as well, is that coming into the next core, the core, when I talk about manipulation, the report is again being manipulated. They are essentially cutting out, because normally for core, they go based off of 2 years. They're going to move it down to 1. So either 1, they're hiding something, or 2, they're trying to kind of remove some of the crazy, wacky numbers that we've got over the pandemic years, or the last tail year of last year, with the numbers have been pretty wacky. So nonetheless, however you want to interpret that, I think, again, whenever you're trying to stop people from panicking, you manipulate reports, and there's been a lot of that lately, and they're bragging about it, they're transparent about it, but the problem is people continue to look at the same reports and null evolved essentially what the other reports that they're pulling out truly mean. Now, again, going into tomorrow we might get more chop, we might get more selling, in my opinion. Technical wise, I mean, we can pull back. We have a lot of support. We broke above a lot of crazy support, and why we've had a lot of chop, because we've been trying to get through a lot of these dailies, weeklies, and monthlies here that we've been floating around. But we are really looking forward to see what happens Wednesday. That's what's pivotal. To be honest, we could go completely flat tomorrow and not do anything. Just waiting to see what happens. Again, the market doesn't want to move too much until it knows for sure essentially what's going to happen in the next 6 months. Now, saying we're not going to know for sure what's going to happen in the next 6 months, because there's plenty of monetary policy, core, and everything else in between. But we will chop for a day until we figure out what's going on with Powell. We want to know where Powell's head's at. Again, if Powell wants to come in extremely hawkish, that could be very bad for the market, which I believe is going to be. But if he comes in and very passive and says, you know what, we could potentially even lay off rates, which I think is going to be a miracle for something like that to happen. Even though we've had consistent decline in inflation, and the inflation that doesn't really matter in core, it's still very high. It's very expensive to do anything, and more so just to live in general for the basic needs and necessities for food in essentially housing, right? So in that whole sector, I've been looking at a lot of stuff on that sector as well. Even, we've had the huge explosion in automobiles, used cars last year. They are declining rapidly, and a lot of people that have bought cars are turning around and bringing them back because they can't afford them. And the average payment for cars is like $800, which is crazy and absurd. And I know the average American could barely even afford something like that. So to see that is just kind of like sticker shock. And then going back into housing year over year may be up. I think it's like 2%, 2.5 or something like that. But over the past 6 months, it's declined 12%, the fastest it has in history, even compared to 2008. They are predicting that we won't be as bad as 2008, but even still close to like a 25% correction in the housing market. So if we've only had a 12% correction, we could have another 12% on top of that to correct things. And then understand that these pools, it is very hard to get loans right now. Even more so those people that don't have jobs, people that essentially have to get special, I forget what the name of the type of loan is, but you have to get a different kind of loan that isn't backed. So if something goes all right, whatever, you essentially can't, you're more at risk to take people on. They don't have steady income. So a lot of those particular companies that are giving out these mortgage loans are asking for people to pay up front or to refinance so that they can turn around and sell it to somebody else. Because of the fact that they can't afford it. So now you're getting a bunch of these mortgage loan companies out there, these little onesie twosies, mom and pop shops that are about ready to go bankrupt. And so this is what I'm talking about. You're getting a lot of bankruptcies just around. You're seeing these in some of these smaller corporations as well, companies, and it's like every week there's a new announcement on some either one layoffs or another company claiming bankruptcy. So there is a lot of issues that you can't just bat a blind eye. And even though the market is pushing up, it will correct when true numbers come out. So this is what I've been trying to warn everybody about. Take advantage of the pumps, but be very mindful that yes, the market can push up when there's no new news, when the headline news, and something I talk about all the time, right? The algorithms are based off the headline news and predictions and forecasts, and so it's going to trade that way. And right now, it's looking like it could, things could get better, but you have to understand that they're not. Once those true numbers come out, right, that's going to induce panic, and then the machines are going to start selling, and that's when you need to make sure that you're okay and covered and have a plan before even getting in a position, whether that's you take profits on the pumps or you DCA and not looking 5 to 10 years, so you don't got to worry about it. You have to have a plan before you take any kind of strategical position in an investment. And then risk management, right? You should always have powder no matter what to DCA if we go down another 20%, because there's a strong possibility. We're in a very, very historical time. This is like no other. This is something I keep trying to bring it across, and people think we're just going to V-shaped recovery out of this. Unless Powell wakes up and says we're going to start reducing the interest rate, there will be no pivot. You'll get short-term pivots, and that's what we're seeing, these short-term bumps. This isn't even a big run. None of this is a big run. And this we have to keep in mind. We've run up 600 points and dropped 800 quick, a lot faster than we went up 600 points. So you have to understand that there is a lot of algorithms that are trading this, and why you're getting pumps and short covering, which is causing essentially these squeezes to essentially squeeze all the shorts out and have to cover. So you're getting a lot of that, but understand that again, this pump is going to be very short lived, in my opinion. Even if we do come in 25, I don't expect Powell to be different. Again, that may not be the thing that sends us down on Wednesday. Maybe we get more bad earnings on Thursday, which I'm expecting potentially from Google and from Amazon. But again, if expectations, these are going off of expectations. And again, if you put expectations extremely low, they have to do really, really bad for it to be exposed. And Snap, I believe, is tomorrow. And Snap, even though it's not the Snap it was 2 years ago, it is still holding a lot of weight on particular things. And Snap will give us insight into potentially ads for Google on Friday or on Thursday. So tomorrow's going to be important with Snap and see what they come up with. So with that being said, again, Wednesday, very pivotal. We have to see and see where we go from there. So again, technical wise, tomorrow, maybe we continue selling. You don't want this breaking back below, again, 4K. I think it's a bad sign. We break back below it. But we've had these crazy wicks. So even if we break back down and wick back up, strong possibility in this market right now. We're playing this whiplash because we're trying to figure out what's going on. And again, it's guided heavily by algorithms that are reading headline news. So you have to be mindful of that. So again, there's no real reason. This is why the market moves with no real reason, because you've got algorithms that are going strictly off of what the data is fed through headline news, and then moves from there. So we will see what happens tomorrow. So we want to hold this. Again, I don't see us breaking out of the 4,100. Maybe tomorrow we run back up into monetary policy, and we'll see. Strong possibility. Again, 50-50. At this market, it's going to be 50-50 until Powell says something. So we could play this range like I've been talking about. We play about 100-point range, so 4K up to 4,100. Maybe we rip tomorrow to 4,100, and then we die back off into monetary policy, and that will dictate us. And again, if we get a very hawkish Powell, could set us back down below 4K. So just be mindful of that. We've had a nice rip. You got to take what you can get. You can't expect things to go back to all-time highs. Now is not the market for things to go back to all-time highs. Even if we ripped up another 100 points or another 200 points, the market's going to, the data is going to catch up, and that's what you have to be careful of, and send this thing right back down quick. So just be mindful of that. So SPX, that's what I'm kind of looking at. Again, watching this range tomorrow. If we do break below that, that's more so preparation, and see what happens. But the problem is if we do break back down below before monetary policy, my expectation is that whatever we get from, even if it's a 25-point basis move, we're probably just going to retest 4K and just continue to chop until we get some sort of news. But again, it all depends. I don't see us breaking out over 41 until we get a word from Powell. So we'll see there. But let's look at old Bitcoin. Biddy hard rejection off the 200 daily. If this thing again breaks back below the 22K mark, it's going to be a problem. Going to head back down to these 16K levels. If we can break out of that, we can hopefully maybe make it up to 30K. Again, things need to align with monetary policy. If they do not, again, these parabolic moves, you shouldn't think that these are going to lead us back to all-time highs. You don't want parabolic moves. You want structured, a push up. So that way, that's more of a pivot as opposed to these massive rips like this. That just means you're going to crash back down at least 50%, back down to 20, and then maybe go back up, which could be a strong possibility going into Wednesday that it crashes back down to 20 and then holds, and then we'll see what happens. Right? Again, we're getting into that normal cycle. We're going to start selling off. So if it can break below or break above the 24K mark, then we could be talking about maybe continuing this rally. But be very, very cautious on these breaks. The dollar trying to break back out. I talked about this wedge. It wants to break back out. We'll see if this can break back up. Bears definitely want this thing back over 103 and eventually break 105. We'll see if this thing can pull itself back into this range coming in the next couple of days. Again, really heavily dependent on Powell. Bulls, you want this thing breaking back down below 100. To be honest, you want a strong rally. This thing needs to break below 100. Or we can just continue to chop, because again, the market will chop until it knows for sure what's going to happen in the next 6 months. If it can't project what's going to happen in the next 6 months, it's just going to chop and get the nastiness that we've been getting until you get hopium spikes. But Tesla, big red candle, hard rejection off the 50 EMA. This is something you got to really watch out for. I was going to bring this up in the weekly, but this is the first time we've retested the 50 EMA monthly. We had a huge break, then our first retest. Of course, you're going to get a huge spike because this thing has just been doing nothing but selling off. But we've also had, look, huge spikes, big sell-offs, huge spikes, big sell-offs. Is this going to be the next spike and then huge sell-off to new lows? Very much a strong possibility. I think the 200, if I pull that back up, the 200 EMA is all the way down here by 75. I'm not saying we'll hit 75, bigger time frame on the monthly, but you are smack right dab against that. So I can see us another huge dive to potentially break 100 again. How long we're going to stay there, I don't know. Again, you need some fuel, whether that's a 50-point basis move or extremely hawkish Powell is going to get tech to start selling off. Is his earnings rally on top of everything else? Short squeezing, short covering, strong possibility on this. Again, it's heavily been sold off, dead cat bounce, and see if this thing just drops. It's kind of what we're watching here. So again, monthly, it's not looking good for Tesla. Just because you got that huge spike doesn't mean that you caught bottom. I still think there's just way too much to play out, and so you have to be very careful with that. And why I can't continue to say risk management is huge. But we'll see. And then on this lower time frame on the daily, you got the break and the retest. It drop at least down to 155. Maybe try to make another run to break the 50. Again, all depends on Powell. Powell comes in extremely hawkish. That might be it, and we might break back down. I don't know. There's no way of telling. Time tells if we've seen a bottom or not. In my opinion, there's a bigger event that's about to occur. I don't know how much weight that's going to have, or how much fear that's going to instill. We've already got to remind yourself that we are in a market that is very numb to very bad news already. So we shall see moving forward. Apple, again, same, very parabolic move. We don't want just straight parabolic moves. This is no structure to continue a bullish trend. This just means this thing is going to rip back pretty hard, at least down to the 133 before continuing. And again, at that point, where is the market at that point? If we've got more bad news, could push back up into the EMAs, retest, and drop. So you got to really watch out for that. Again, that's one of the very few things, only why I like to use these EMAs, especially on the daily. You can see that moves coming, right? And these are more these are better patterns. Watching these patterns to watch as opposed to breakouts, whether that's ascending, descending wedges or a wedge. But because none of those patterns have really played out. This is why I do a lot of supply and demand. This is why I watch the 20, 50, and the 200. The 100 is okay, but I don't really like the 100 that much. I find it to be more of a speed bump than really anything else. You get your big pivotal moves off of the 200 is typically a big pivot, and then typically the 20 and the 50 on the daily, you get really good hard rejections off those to play, and that's what I like to play. But aside from that, like intraday, the 20 and the 50, they haven't really been holding, especially if you get a breakdown. It really depends on the overall sediment. So if in your short-term sediment for that day, if it's up, they do provide good support. If it's down, if the overall sediment is down, they do provide a good solid rejection, short-term, obviously, and first retest. It's always the first retest. It's not the second, third. At that point, you're kind of you're waiting to essentially have your stop loss hit if it's more than once. A second time, maybe But again, the more you hit that line, the odds are that it's going to break that either that support or that resistance. So BA still consolidating, very overextended. Something I've been talking about. Again, I'm thinking that tech is trying to catch up with value, trying to catch up with financials, and then all these are just going to roll over at once. That's what it's looking like. So again, BA needs to break the 215 or needs to hold the 203. If it breaks down below that, it has a lot of pretty strong support. So it's not just going to roll and fall. Again, depends on the sentiment of the market. It very well could. If there's if there's a lot of panic in the market, it's really not going to matter. But again, you're looking like a rollover, very top heavy on BA, and the banks are very much the same, very top heavy. Again, not breaking range. Needs a bigger catalyst. Really, your biggest catalyst you can get right now is for Powell to say that they are just going to start reducing rates, and that is not going to happen anytime soon. And then worst thing you can say is 50-point basis move on this thing and be extremely hawkish. Would absolutely obliterate and potentially cause all these things to roll over, all these different industries to roll over. And again, like I said, you start to see fear when all the industries look the same. And that's why I'm highlighting the fact that tech is getting there to where all the industries are starting to look the same. It's been value, it's been financials to this point that have looked the same, that have been pushing. Now you're getting tech, you're getting Tesla and Apple starting to look the same. Watch out for a big rollover, strong possibility, heavily dependent again on Powell. Even if Powell does come out with a 25-point basis move and is just mediocre, hawkish, we can still push up, right? But you have to be mindful, 100, 200 points is about all you're going to get. There's still a lot of undecisive things and things that can change, right? It's when the overall market sentiment is changed, and that's not changed yet. When that changes, then you can be more bullish on going to the upside and all-time highs and all that. But right now, we're just not there yet. We're just too much uncertainty, and people are well aware that there's something bigger brewing. When gas prices start pushing back up and all these other things start pushing back up, you're asking for a world of hurt. The last thing you want is inflation to pop back up. Then that's absolute panic at that point, because right now you're seeing a steady decline. Again, if it pops back up, it's going to potentially look at limit downs at that point, because people will be worried that, oh, inflation hasn't hit peak. That means we hit the reset button. Where do rates go at that point, right? Do rates go well over 6 at that point? Potentially even higher. I can't even imagine rates going even higher than what that already. I mean, rates have been pretty high at some points in history, but you could be flirting with that, right? And so it's just, you have to be very careful. Just, we're not dealing with something that just easily just goes away. And so that's why I keep, even though you could say bullishly cautious, because I'm trying to play the trend, but overall the trend is down. You have to keep that in mind. And so I will continue to play the downside until something changes. I'm not saying I haven't played at the upside. I have played at the upside and try to take advantage of these spikes as much as possible, but also very cautious. Markets already ran up parabolic. Why are you going to continue to buy the top to push up? Even if there is good news, you got 50 more points out of the 250 points we've already moved. Right? Maybe we get 100 points. Take advantage intraday. Don't expect it to keep going, or move your stop up until it keeps going. And then if it does pull back, it tags you out before it drops. Nonetheless, not financial advice. That's not what we do here. We do it for purely entertainment purposes, to leave you with a smile and hopefully drop a thumbs up. And until next time, we'll see you guys later.